So, a very good evening to all of you. Myself, Ramit Sengupta, SC Banking. Today, we have gathered for the introductory session on credit analysis. The main motto is that we just want to have a quick, we want to give you a quick overview of how things happens in India, how we work. And then we will try to understand from you that how we can work together and help you remotely by giving trainings and all. Basically, friends, if you seek my opinion, I think credit is just like music. In music, we have something called do, re, mi, fa, sol, la, ti. This basically sets the tone for the song. One remarkable thing is that there is no fixed rule regarding which a note is to be sung and when. Similarly, in credit, there is no fixed grammar, like which all things you should do first and which all things you should do last. But whatever you do, the end product, that is your song or the credit appraisal, should be perfect. For example, if you are doing asset-based lending, we mainly focus on the asset we are mortgaging. So factors like tax return, sales, profit, all these things become secondary. And if we are financing schemes which are promoted by government, our focus is generally on the set of rules which they issue in the form of guidelines. If my proposal conforms to the rules, my job is done. Forget about complicated balance sheet analysis. The most popular form of lending are structured lending by banks. Instead of government, it's the bank that sets the rule for you. We have to match the rule point-wise with the proposals in hand and do the lending. That's all. Your housing loan, vehicle loan, personal loan, all these things comes in this category. But, there is something much more interesting category, and that is called general credit. It's not that they don't have any rules, but rules are much more broader. Why? Because the requirement of the customers are broader. This is the most important category of credit, considering the fact that a nation's economy depends on it. It might be a power plant, it might be heavy engineering, or it could be a coffee plantation and processing unit as well. Now, do you know how a coffee plantation or processing unit is financed? Generally, we finance it by cash flow method. Now, I'm having a ready cash flow screen that I will share with you. You see, this is how the cash flow looks like. And here the customer has basically forecasted what will be the receipts and what will be the payments, that is direct cost and overhead cost. Everything he has categorized. So the cash budget is the most simplified method of assessment of working capital and the most scientific one as well. As you can see, after deriving all the payments from the receipts, he will arrive to the net cash flow. This opening balance on your screen, if we suppose it is the customer has actually approached you for a 50 million of loan, 50 million Tanzanian ceiling, let us suppose. So let's say if he is having this, if the bank gives finance to them, you can see he is having some closing balances that's in negative. Now, what is this? This is nothing but the amount of Tanzanian ceiling or the currency that he has to pump in the month of August and September and so on. So in this case, we have to ask the customer that from where you will bring this amount. So In this cash flow, we have to ask him that, okay, boss, we gave you 50 million. You are doing the business. As per your cash flow, you have to bring this 23 millions. From where you will bring this? So he will say, no, I am having money. You are having money. Where is the proof? So we have to go and check his net worth, whether that person is having enough liquid asset to invest in the month of August. Here he cannot fudge things and tell that, no, I will bring it from the business and all those things, because whatever cash will come in the business, he has already accounted, and this is the result. So this is how a cash flow works. And before accepting the cash flow, all these figures like this 2.30 million, 5.75, we have to understand that how much area of land he is actually, the plantation work is going on. What is the capacity, whether the production will be that much that he will be actually able to do this kind of business. So each of these item, there has to be some logic, because these figures independently, this doesn't mean anything. So until and unless you know the extent of area which is cultivated, the capacity, the selling price, the grade of the coffee that he is actually manufacturing, you won't be able to back calculate and ascertain whether these figures are correct or not. You know, the general tendency of the customer will always be to increase the amount of receipt and to decrease the amount of cost, so that the profit is higher. So what will give you an indication whether he is doing things in a proper manner or not? You have to see his past results. So he will give you his balance sheets in this form. Now let me tell you one thing. One of the most common mistakes that I find observed with the bankers is that we are generally very happy once somebody gives you financials, signed copy of financials, we are very happy. But you know, audited balance sheet is not only about financials. It comprises of auditor's report, his remarks, and there are lot many things which needs to be studied, especially in case of big proposal like this. For example, if there is some sort of contingent liability, that figure will never appear anywhere in your asset or liability. Also, if there are some qualified remarks made by the auditors, that will also not appear here. So don't get fooled if he is only submitting the financials. Please tell him to bring the full set of audited balance sheet with the remarks, with the auditor's remarks, with the auditor's report, and the every country will have a generalized format. If you are beginning your credit journey, don't worry. You might be having a lot of listed companies in your country. So you just go to their website and download their audited balance sheet. You will have an idea how it looks like. It will have at least 10 pages before and 10 pages after these financials. And you don't need to have become a very expert of accountancy or something like that. Just read it. It's plain, simple English. And I hope you will be able to understand if there is any kind of negative remarks about this company. So once you get hold of this balance sheet, what we do is that instead of doing ratio analysis or calculations one by one, because that is very difficult. Doing it through calculator and all those things is very difficult. And especially in branches, I don't know about Africa, in India, we have to really focus on the turnaround time. Time is very less for us. So we have to do things in a flash. I don't know how much time your management will give you to sit and do analysis, but here maximum they will give me, I get maximum 2 days to give an opinion or to raise queries on the customer. That's all. It's not that you can sit for 1 month and do the rigorous crunching of figures and then you come up with a query. So what we do is that instead of breaking our head on the individual figures of balance sheet, we classify the asset, liability, expenditure, everything into our own balance sheet analysis format, which looks like this. In order to bring all those figures here, you should know which figure should go where. Now, this is a sample balance sheet analysis Excel. Don't try to compare the figures with the earlier balance sheet I have shown. I'm just showing this for a reference. So we basically bring it here. We basically bring the figures here. Once we are satisfied, once we have classified the current asset properly, current liabilities properly, direct cost, indirect cost, everything properly, then it's rather easy, because it is already filled up with formulas which can give you any kind of information you want. So any kind of analysis that we want to do, basically we come here and take a look how the sales is growing or it is decreasing, what is the position of the profit, and if you want to know the ratios are also here. So the comparative analysis, so everything we get in a flash. That's how we accelerate our process. So this is basically what and how we are doing in India. Now let me turn off the presentation so that I can see everyone. So Joel, your thoughts. Bappa, would you like to add something?
Hello, everybody. As explained by Ramit, he has explained quite beautifully. What I would like to say, that why we are doing all these kind of things, whenever we get a proposal and we are just crunching with the data, we are making the analysis, what is the aim of the particular thing. Every financing comes with a risk. Maybe it's the risk, maybe the borrower may default, borrower may fail in repaying their commitment, maybe it interest or principal, or maybe the deteriorations of the investment value in case of investments. So our aim is to minimize the credit risk and we need to take some deep analysis to see is there anything that we can rectify or prevent our institution from this kind of a risk. And only I think you are all aware that risk is something that cannot be eliminated. It can be minimized. It can be limited to some extent with some mitigations measure, and that is the things we are doing.
So Joel, this is how we are doing. Joel and others, everybody in Africa, warm welcome. This is a very remarkable gathering, I must say. Joel, can you hear us? Yeah.
Yeah, I can hear you. I just wanted to ask a question.
Tell me.
I think on the earlier cash flow which you were presenting before.
Yeah.
The one in I think the one in our local currency.
Yes.
So you mentioned something about like financing for this like coffee farmer.
Mm-hmm.
So you said earlier that this is based on cash flows.
Yes.
And from the cash flow presented, the revenues will be coming in somewhere around September. So it means considering the farm preparation and the whole time period, then from the cash flows, then the revenues will start coming in from somewhere around September, right?
Right.
So, but then in between, we've seen the customer is projecting that some negative they'll be experiencing negative cash flows. So he said the customer may either we have now to assess the customer should bring in funds from their own sources.
Yes.
But then what if it's a situation that the customer so with this, first of all, with this type of loan, this will be will it be a working capital term loan? Because from the presentation, then how will the customer pay the installments? Means it will be a single installment at the at the end of the year, after the funds start coming in. Because if we finance as a working capital, means if we give an OD facility, then definitely in between they'll not be able to service the interest.
See, there are two ways. I will express my opinion, then I will seek Bappa's assistance. See, there are two ways we can handle this kind of situation. You are absolutely right. When he's not, as you can see that throughout the year, although there won't be any kind of receipts, but he will be incurring some sort of expenditure. Okay. And in order to counter those expenditure, he will need that working capital. So, like you have rightly pointed out, it might be, you can explore the possibility of going for a working capital demand loan, and the value of the working capital demand loan will vary with the season. Okay, will vary with the season, and the repayment period can also get varied. There is nothing wrong. You can give it a maximum period of 6 months or something like that. Then the repayment periods will overlap, and it will automatically get closed once the receipt starts coming. Alternatively, in this kind of loans, how we do the monitoring, we can adjust the drawing power based on the stocks or the debtors he is having at present. We can adjust the drawing power. Basically, in these two manner, we can tide over the situation. Now let Bappa add to this something.
Yeah, for this, as this is a seasonal activity and the cash inflow are limited to a certain extent and certain period, for this, I think it's September to December, if I'm not wrong. And what the structuring of these proposals is quite interesting, as almost 8 months, there is no cash flow, but outflow is there in terms of maintenance expenses, salary, and all this stuff. So as Ramit told, that we can frame or structure the proposal in both ways. Let's say we can frame a working capital demand loan or term loan. We can give that definitely, and the repayment of those loans can be fixed on this cash inflow period of September to December. We can do that. The repayment will keep for the last 4 months, and for the rest of the period, either company can service the interest, or even we can capitalize the interest and frame it like that even the interest will be paid on that period. Another way is to just plain running facility. As I've told, you can sanction a running facility. You just first analyze the highest cash deficit in the period, and you fix the limit like that, but you limit the drawing power of the particular facility based on the monthly cash flow and on the monthly deficit in the account. One beautiful things we can do here in terms of servicing of interest, there is a concept of debt service reserve account. Normally it's applicable in case of term loan, but what you can do in the seasons where the cash flow is coming, when there is sales, we can make a fund. We can make a specific fund to service the interest for those 8 months. Debt services record. We can do like that, so that the company do not face any challenges in repaying their interest commitment, and the principal amount they can pay in their September or January period. So we can frame it as per the convenience of the customer. Also, we have to discuss with the management that what are the things, what are the structures is comfortable to them. It's not about us. They will ultimately pay the money. So we should be flexible enough to discuss with them and make easy for them the repayment.
Right. Thank you. Frank, would you like to ask something? Yeah, Joel, you want to say something?
Yeah, I just wanted to add something else there.
Yeah.
So thank you for your good points from both of you. My other concern is, you see, during the months that cash flows were running negative, or when the cash flow started running negative, so some borrowers will, let's say we have sanctioned a working capital demand loan. So, but then the borrower means before sanction, let's say the borrower is asking for excess funding in terms of during in terms of meaning during the times where they will run negative on their cash flows, if they could get any excess funding. Now, from my understanding, if you've already sanctioned a working capital demand loan, then if you're speaking of excess funding, that means you're speaking of restructuring, right? Because if, let's say, we have already sanctioned a certain amount, and then the whatever projections that the borrower submitted at that time, so things have gone reverse. So they run negative on their cash flows. So they require excess funding to meet the actual situation.
See, this sort of situation is not very uncommon. This is common in our part also. That's not an issue. It's not called restructuring. We call it here, you can handle it by giving some ad hoc limit as well. So ad hoc limit, generally we give when, let's say, he is having more orders or there is some kind of positive news. But in this case, you are saying that it's a negative news. When, let's say, he has unanticipated orders he has received and he is unable to meet the expenditure. So we give them ad hoc limit. Let's say it's a running cash credit account and of 20 million, we give them ad hoc limit of 2 million to tide over the crisis. That is very common. Now, what you are saying, then there is some negative news. So here actually you can still give ad hoc, but you have to ascertain from where he is going to repay, because the company gave you the projections, you have accepted, the anticipations went wrong, and now he came back to you and asking for that no, my projections were wrong, so now you give me more. So this kind of thing should not happen. But yes, we can give ad hoc facility to him, but at the same time we must also ensure that from where he is going to give back. Restructuring is completely different. Let's say we have a situation in COVID when there is no cultivation for 1 year. So there is no question of the money coming back as scheduled, right? So what we are doing is we are converting these working capital loans into term loan of 5 years or 7 years. Okay, so then it becomes restructuring. Just by giving additional funding, it does not mean restructuring. You have sanctioned a limit for 1 year, that's fine. But after 6 months, the customer expected that no, this 50 million is not going to be sufficient. I may need more. So in between also you can renew and enhance the limit. There is nothing wrong in it. But yes, as I told you before, we have to ascertain the reason why this has happened and how he has to recover. Anyone else? Victoria, Lena, Frank?
Shayan, you would like to say something?
Yeah, please. We can't see you.
Hello, good evening, friends.
Hi.
Hello.
Hi,
Am I audible?
Shayan is another colleague, my colleague from India.
Hello, am I audible?
Yeah, sure.
Yes.
Please go ahead.
Yes, sir.
Yeah, good evening, everyone. I understand that 2 questions have been raised so far. One is regarding coffee plantation, and the other is regarding negative cash flows that are emerging out in the middle of the project, if I understand correctly. See,
Right.
in India, there are some structured schemes for various kind of plantations like coffee, tea, rubber, and the details of these schemes are available in RBI as well as NABARD websites. I do not know how you are working out over there in your country, but in our place, when we advance to a plantation, in your case, what I understand is the plantation is already giving crop, right? Because what I understand is that repayments are coming, means incomes are being generated at a particular year of the month.
Yes.
every year. That means the plantation is already giving crop.
Yes.
Here we have structured formats for financing various kinds of plantations, tea, rubber, coffee, and there are so many other kinds of plantations. When we finance such type of activities, these are generally long-term finances. And in these type of finances, we generally give working capital to them. We sanction working capital limits right at the time of sanction of the original loan. And these working capital facilities are given to the borrowers from time to time. We generally disburse it to a current account from where they can use it. And repayment generally is as a whole. Repayment is generally taken as a whole once the production starts. This is what I wanted to add in addition to whatever my earlier colleagues had said. And the second thing, negative cash flows generating in the middle of a project. Am I understanding correctly?
Yes,
Yeah.
yes.
Yes.
Yeah. So I think they are trying to mean something like subordinated debt.
No. There's nothing dealt with the subordinated debt. Only thing is that the negative cash flow is due to there is no revenue since the cropping will take place for 3 to 4 months. So out of 12 months, they have only 4 months where they have activity, but they have to maintain their factory. They have to give wages, salaries, and everything for around the year.
But our friend was suggesting that whether it is restructure. I think restructure definitely not a restructure. Restructure neither rehabilitation. We can definitely give ad hoc facilities in between to take care of their short-term needs.
Yeah. That's what I'm.
Facilities. That.
Yeah, Joel. Actually, what we are also doing. I mean, let's say initially we were considering debtors up to 90 days. Okay. Now, when they are in a cash crunch situation, we can also extend the debtors from 90 days to 180 days. That will also ease up things. That will also give them some liquid cash to work with. Bappa, would you like to add something?
No, it's perfectly all right. I think we have covered all the points of this particular case.
Right. So, Victoria, Joseph, Frank, you are on mute. Frank, you are on mute. You are on mute. Please unmute yourself.
I just want to ask.
Yeah.
You are saying that you are going to give an ad hoc facility, right?
Yes.
So how are you going to treat that loan with ad hoc facility? Are you going to how are you going to charge them? Are you going to combine the ad hoc facility with that loan?
It will be a separate limit. The account number will remain the same. The limit number 1 will have the main facility. Limit number 2 will be ad hoc. Okay, that will be valid for, let's say, 2 or 3 months, and within 3 months he has to close that ad hoc. That's how it happens here. Yeah, Victoria.
Can I add some?
Yes, surely.
When we talk about ad hoc, what do we have? Hello?
Yeah, you're audible. Let me know.
Can you hear me?
Yes, we can.
Hello? I heard you saying maybe after giving a loan to a customer, the customer will come back and claim that actually the amount that I was given maybe wasn't enough. So how do we analyze like how much ad hoc should we add to this customer and what time frame should we give him or her?
Right. Just like I was saying, let's not get concentrated with only coffee plantation. The thing is that we have to ascertain why he wants the ad hoc. So let's say when he is giving the projections, he has projected to make a sales of, let's say, 500 million. But somehow he has got more orders in hand, which are in addition to what he or she anticipated before the year. The customer got additional 50 millions of order. So while doing the main assessment, we have taken the work orders, we have understood the requirement, and we have fixed a limit of 50 millions. In between, he has come to us and he has requested, sir, originally I anticipated a sales of 500 million, but now you see, due to my good work and my reputation, I got another 50 millions. So in order to execute this order of 50 million, please give me additional 5 million of funding. And I promise you, since I am having enough cash flow from my existing projects, this is my cash flow statement. So you can scrutinize, you can see that I will be having sufficient cash in hand after 3 months, which amounts to 5 million. So you can safely give me 5 million now, and I will be able to repay that 5 million that time. That's like it's going to happen.
Excuse me, sir. What if we've sanctioned the ad hoc and then this whatever? So the customer says so 500 million was what
Original
project. Yes, so they're projecting at first that sales will be at 500 million. So this has risen to a certain number. So based on that, we've given the ad hoc facility. Yes. So for a certain period of time, let's say 3 months. Then after 3 months, we're expecting that the customer will repay and close the facility. That's what you said, right?
Yes.
So what if after 3 months, the exact sales which were the customer was expecting, all of the sales have turned into debtors?
Okay. Okay.
So at that particular point of time, he cannot pay that ad hoc and close the facility since the funds are still outside with the debtors.
See, the thing is that, please understand, while making an assessment or while trying to draw a projection of 1 year is much more difficult than doing a prediction for 3 months. Because you are sitting now in February. If I start talking with you about next February, that is far away. So things can go wrong there. But sitting in February, you will have an idea of what is the sales realization that are taking place. Because now you will be having an account where you can actually see that how the sales realizations are taking place. Every month he will be giving stock statement. From that, you can easily see that the debtors, how old these debtors are. Whether all these debtors are more than 90 days? No. There are some good debtors as well. So you have all these records to which will actually help you in taking this decision. If you see that his majority of the debtors, you are sitting on 4th of February and you see that majority of the debtors from the stock statement submitted in January, all those things are more than 100 days or 150 days, then certainly you cannot give. But if you see that no, the turnover is good, there are so many transactions in the account, the debtors list that he has given, it is comfortable as compared to the sales. So you take a decision or you sanction it for 3 months, then it will definitely not go wrong.
Okay, got it.
Okay. Lina, we haven't seen you till now. Are you there?
Hi.
Hi.
Sorry, I think I logged in late. I was in another meeting, so I'm not able to catch up how you started. But however, maybe I need to just ask from a different case study. What if the same case happens to something like project financing?
Okay.
Yes. Let's say it's a facility that is long term. That is long term. And then by the end of financing, the project is not completed. and let's say within a time frame the customer is supposed to already start making repayments, but then there is need for additional funding. How do you look at such a case? Because however there is already an exposure, which if you don't add additional funding, that means you're looking at an NPL. You're creating an NPL.
See, Lina, what I can understand, let's say you have already given a loan of 100 millions, okay? So it's a project funding. What I can understand from your point is that the project has already started its operation. So in case of long-term project funding, we do the appraisal at least, let's say 1 year or 2 years before, right? So cost escalation, price escalation, these things are bound to be happen. In several cases, I have seen that unfortunately, due to wrong assessment or due to under assessment, because whenever you join a branch, it's not that every loan you are doing. You are basically continuing the legacy. You are left with the account that your earlier bosses have done. So perhaps that project was underfinanced. Perhaps he needs some more money, and he is asking you for 5 million. And if you give that 5 million, if you don't give that 5 million, your 500 million is at stake. So we have to take a holistic approach. We have to understand the requirement and what he is saying, what was the projection that he submitted at the time of appraisal. And like what I understood from you, that the project has progressed so much. So whether it has start earning, if it is earning, how much is it earning, whether it is meeting the expectation, whether it is meeting the projections. So we have to go through all those things. And if they're asking for additional funding, mostly they will ask for working capital, right? So it's quite normal, and it can happen. Anything else? Victoria, you have anything? Hello, Victoria, am I audible? Frank, I think you were telling something.
You have explained it very well. Now I understand.
Thank you. Thank you. So that was the first part. I think we have lost a couple of people. I think we have lost Lina. She got disconnected, unfortunately. Anyways, so what's the plan? I mean, how we are going to take this thing forward? Frank, you can please, all of you can please turn on your camera so that we can see each other. Hi, Lina, you're back.
I'm not sure what logged me out.
Oh, it's really dark there. Yeah. So, Joel, what's the plan? How we are going to take this thing forward?
Actually, I was going through the YouTube videos in your YouTube channel.
Yes.
So I was thinking, well, there's so much content there. And then I was thinking if it's possible that the same content can be, if you could club that together and come up with English version of that. I think that would be really helpful. Then upload it as you said. Then we can, and then on top of that we can make arrangements from time to time, because I think with rather than watching the videos and all, I think it's better if we come up with real life like examples what we're facing on our desks. So I think it's that's a better way of learning. And if we have certain cases that we find or certain situations that we find they are really difficult to handle on our side, then maybe we could put it up as a and present them here for the better of everyone here, so that we could understand how to handle such situations.
Right.
So that is my view. I don't know what my colleague.
Yeah, I tell you something. See, basically, first of all, you inform me whether in your Tanzania, I'm not only talking about Bank of Baroda, whether anybody is conducting online classes or credit classes like this.
Yes.
Okay. I mean, it's an organization or individual. How they are conducting?
No, it might be maybe Lina can add up to that. It might be within the bank, like inside trainings. For example, we take from time to time, but then with such type of trainings, it's quite difficult since you have first of all, it's they come up with a specific topic that they want to talk about. So some people are not interested in that. Some people are not working. Means at their levels, they're not working with their levels and departments. They're not fluent, or let's say they're not they're not very mobile in handling those kind of issues. So it's quite difficult if we take the trainings like inside trainings. They normally they are so too specific.
Okay.
Yeah,
can you please explain the situation in your country, how they are conducting the training and how it's happening, so that we can learn? Lina, am I audible?
Yeah.
I think Lina is having some connection issue. Anyway, Victoria, your thought? Victoria, am I audible?
Yes, come again, please.
Yeah, I was just asking that how it would be more beneficial for both for you and for us, like how you want us to conduct the training. There are basically 2-3 models of e-learning. What I just asked Joel is that whether any organization or any individual is conducting webinars, whether they're doing e-learning modules, whether you have a learning management system in your bank, or you are studying from where. What are the sources?
On my side, actually we the trainings on credit come what can I say? They always we have different trainings. Maybe example with Bank of Baroda, we always learn them online. Actually, some are conducted from India, and I remember the last time we had a LC training. So the timings are also kind of difficult. We do it internally.
Letter of credit, you got a training, letter of credit?
Yes.
Letter of credit, you got a training, letter of credit?
Yes, but the situation was very difficult because the training was done within working hours. So sometime you're in, sometime you're out. So there's a lot of things you miss out in between.
Okay, I will. If you are interested to learn letter of credit, I will share a link in my group, because letter of trade finance is usually handled by my wife. She worked with the State Bank of India for 8 years. So she has launched some beautiful Udemy courses. If you love them, you can get it. Letter of credit courses we are already having. They are very good courses. Okay. So the challenge with this online learning is that, bankers are very busy. I mean, I really appreciate all of you for taking time and attending the meeting. Bankers are really busy. So that's the reason I launched my YouTube channel, so that everybody can watch at their convenient time whenever they want. And if you want to meet, yeah.
I think like what Joel said, you should put them in English. It will be much easier for us.
Correct. Frank?
And individually, I think if maybe we come to, because we already have your number, we can come and maybe ask you if it's okay with you, ask you to make online notes on, just simplifies a certain thing, maybe guarantees. You can just have a simplified form or notes. I think if it's okay with you, I don't know how you'll manage to do that, but it will be helpful for us for perusal.
Okay. So Frank, are you there?
Yes, boss.
Yes. We can see you. Please turn on the camera.
As Mr. Joel said, most of this training that we get them from our organizations, they come at during the working hours. So it is very difficult for us to make follow-ups. You know how banks are busy. So it's very difficult for us to make follow-up. And the other thing is, they come with a specific topic, and you cannot answer questions. So I myself, I would like you to maybe you should share your videos on YouTube in English version, and you can try to add the topic, how this COVID-19 has affected a lot of disease, and it has most impact in loans. So if you can come up with topic on how to face this challenge, it could be I will be happy, because many people here fail to pay their loans due to COVID, and it's also difficult to restructure those kind of loans, because we don't know at what time this COVID-19 thing will end.
Right.
Yeah.
Thank you. Yeah, Lena, are you back? Am I audible? Lena, Joseph, am I audible?
Yes. Okay, so I think all the content should be shared, and then me, I would request, apart from the YouTube that we'll be watching, maybe we should schedule some interaction. It should be more of interaction. We can actually get specific days that we all have time, and then we can let's say select some case studies, or generally on the agenda that has been gone through, maybe a specific topic, and then we go through it together, like more of very interaction. That would help a lot.
Right. See, basically, what I am also planning to do is that, like you have said, yes, I will be making some content in English. I will be making some courses in English, no doubt. And those will be extensive courses. Like what I understand from your part of the world, that you work with cash flows a lot more. Whether you do working capital assessment in some other method also, or it's the only cash flow you are using? Joel, can you please tell me whether you are using any other method of working capital assessment, or only this cash budget method?
No, working capital assessment as well, sir. Turnover methods and all.
Oh, really? Turnover methods and also you do.
Yes, yes.
So what I can understand from, this was so what is the ticket size normally? The loan amount, whether you do small loan as well or only big loans?
Means for with us, it ranges from I could say medium with us, from medium to
Okay. Okay.
to the large amount. Yeah.
Okay. So I think the opinion is more or less loud and clear. So what I will do is I will work on few topics. Let me start with working capital assessment. I will do a good content or good course on working capital assessment that's in English, so that it's easy to understand for you. And I will also include case studies there, and I will go step by step instead of skipping things, so that at one shot you can understand the entire thing. And once I have done the course, you people have watched. Yeah, Joel?
Sir, just to add up something.
Yes.
You know, with the banking style here, it's quite different from India.
Okay.
I've experienced a bit the side of India as far as banking is concerned, and here in Tanzania. So I think whatever the video that you prepare, there are things or there are some of the situations which are quite different here. Means the concept is the same, but then coming into hands-on, it's quite different. It's quite difficult. Let's say like calculation of age of debtors. You see here we have even the borrowers themselves. They don't have that that knowledge of going to prepare. Since we have a problem from the accountants, so it's quite a complicated issue. But then understanding how this like age of debtors, how the whole working or the working the cycle. I think this all these issues should be included in your content. For example, you are speaking of debtors. So I would really love to know the approach that you use in India to closely monitor this. In terms of how you take your, I saw the other presentation, I think it was for stock statement, but it was in Hindi, so it was quite different. It was quite difficult. But then I think that's in working capital assessment, because those things are most important, especially in situations like we were speaking of providing ad hoc and all. So, so I think please just include all that in your content, because the practice here, the style here, it actually makes you work as with a certain style that if you found your boss was working in a certain style, then you'll go with the same style, regardless you understand or not. But you'll just say no, because boss here, he always writes 90 or 180. I will also write 90 or 180. So, but the actual concept, you don't get it. So I think it will be very helpful if you clarify.
Thank you, Joel. Thank you. Let me add that please don't have an impression that in India everything is perfect and all the customers do understand what is debtors and they are giving everything all right. It's not like that. Basically, whenever I go and join a new branch, first of all, I train my borrowers. I will call a customer meeting and I will train them how to fill up this stock statement, because that will reduce my job in the branch. That is the first thing I do. Okay. And whenever their person comes to submit a stock statement, I find something wrong, I will call them up and explain what is wrong. You please come tomorrow. So my first 3-4 months goes training them. Otherwise, I am having 30-40 OD accounts. Every day somebody is coming and every day there is some problem. It's not manageable for me. So the thing is that if you want to reduce your work, you have to train the customers as well. And with this advent of technology, you can also take help of this Google Meet and all, and you speak to them and train them. It's quite obvious they will not know this financial part. That is quite natural, because they are supposed to know their business. They are supposed to know how to build a car. They are supposed to know how to do the coffee plantation. They don't have the knowledge of finance. That's why they are coming to you. And so if you guide them, if you train them, at least in my experience, 50 to 60% people will learn, because they're interested to learn. And you have to explain them the benefit that, sir, you will save your money that you give to the accountant. My stock statement tutorial that you see in YouTube, I generally, I made the channel for exclusively for bankers, but later on, several common public also went on to see the drawing power calculation and stock statement, and they were also benefited. So now they can confidently do that stock statement calculation and submit it to their bank. So that's how it happens. Okay. Yeah, Victoria, you were trying to say something?
I just wanted to give information. Maybe when you are explaining something, please take note that we differ on credit knowledge. Some people here are very new on credit, they're starting up. So I think there are some words, or maybe we differ in we are in different levels. Maybe Joel is experienced like 4 to 5 more years. Lekule is just very new in credit. Maybe I have 2 to 3 years in credit. So I think you should have a base that we all understand maybe what concept is being talked about.
Sure. I will definitely keep that in mind. That in mind.
Thank you so much.
Yeah.
I just want to appreciate you.
Yes.
I just want to appreciate your point. I think that was a very good point what you raised regarding means teaching these customers how to go about these kind of things. I think that's something we should really take into concern.
Yes. Frank? Lena? Anybody? Yeah, Frank, please go ahead.
I think Mr. Sina Roy is raising his hand.
No. Bappa?
Can you share the video of the regarding the stock statement? What the video that you uploaded on YouTube?
Yes.
You've shared an actual sample of the form.
Yes.
Okay. Could you share a sample of it with us? Maybe in the group?
Yes, no problem. No issue.
Yeah, we could study that and see.
I think your bank should also have a sample, will have a format of stock statement, no?
We do have, but it's not detailed at all. I know I am saying that it's just a 2-line statement.
No. That's not stock declaration, Joel. There are two things. I think you got hold of the wrong format. there are two things prevailing in the bank. So one is called stock declaration, where they will simply write this much amount of stock I am having, and another is this illustrative stock statement. I am having stock statement from different banks because I deal with consortium advance also. So I have State Bank, Syndicate Bank, Canada Bank, Union Bank. All the banks are having some, larger formats, illustrative formats. I think you can ask your Indian counterpart, some of the corporate finance branch, they will definitely send you. Bank of Baroda, definitely, they will definitely send you. Because I can share the format, there is no issue, but I don't advise you to start taking stock statement in that format, because tomorrow your inspector will come and comment that it is not taken in a proper format. Then you will be in trouble. That's the issue.
No, it's not for the purpose of. I just wanted to study that and see what details are being captured. Yeah.
Yeah, I will definitely share. I will definitely.
Because from what you're saying, it's quite true. Then we've just been taking that stock declaration from our side.
Continuing like legacy, grandfather to father, father to son. That's
exactly.
Yeah. So can we switch on our camera for a short while so that I can take a snap of this session? Frank, Victoria, Lina, Bappa, everybody. Lina, are you there? Victoria?
The ladies, they have to go and put makeup.
Oh, acha, put makeup. Okay. Lovely. So it was really nice talking to all of you guys. On behalf of Shuddesi Banking, I thank you once again for permitting us. It was really a lovely experience. I will definitely keep your feedbacks in mind, and I will also take samples from you to prepare our content in future. Actually, YouTube, we are shifting from YouTube to Udemy because everything is having certain expenses associated with it, and YouTube is not that much rewarding, which is quite understandable because these are all niche content. These contents are made specifically for bankers. It is not a comedy or a song that millions of people will come and see, isn't it? So we are basically shifting towards the Udemy. And Udemy, it's equally good. Victoria, I will share you our letter of credit tutorial. We have hosted in Udemy. You can take a look. My wife is right now working on Incoterms, Swift messaging. These are his next 2-3 contents on which she is working. So I will take your feedback, and we will be in touch through WhatsApp and perhaps occasional conferences like this, so that I can learn more about how you are going about your credit in that part of the world, and so that once we launch the content, you can also recommend to your friends and all. So thank you, all of you. Thanks for your time. Frank, bye-bye. Take care.
Thank you. Thank you.
Thanks, everybody.
Yeah.
Bye-bye.
Bye.